Hey out there, all you traders and tackletrading.com. This is Coach Gino with another market recap, April 14, 2016. Let's kick it off by looking at the S&P 500. Doji Day. We had a Doji Day. I don't know if you see it there. It looks like a crosshair, right? That's called a Doji. Right there at resistance. I've got a little line there for you. You can see it right back here. Doji at resistance usually means a possible reversal. But we have some more resistance coming up here and more at 216. With earnings season, it's going to take some good reports to bust through this. But I want you to notice also down here, the volume has been positive for a while. The volume is positive for a little bit here, bounced back up, and that confirms our bullish trend. And the relative strength is definitely strong. We are in a nice bullish channel. Support's going to come in down here about 240. We'll see on the next pullback what happens there. Now, interesting enough, on a Doji Day like this, I think it's waiting for earnings. We're going to be getting a lot of news next week. But what's interesting is the sectors. Always keep your eye on the sectors. Take a look at the DBA Power Shares Agriculture. Very bearish. It's been bearish since here, the middle of March. Perfect, almost textbook bear retracement. What's a bear retracement? When you're in a downtrend, and we've got this little cross right here, the 10 and 20 day moving average. We're in this nice channel down. This might be a nice setup right here for a swing high. My trigger would go just below here, about 20, 25. But I'd look for other agricultural type stocks to play this. And if you look closely, RSI has been below 50. About the same exact time as the on-balance volume. This is definitely a bearish trend. So check out the bearishness going in agriculture. Not too many bear things out there, but if you have to find something in the bear market, there you go. Also the dollar. The dollar has been bearish. Doing the inverse of the market. What is it doing? We got a hammer, almost a doji there on the 20-day moving average. Another bear rally. So we got a doji on the market, a couple of key players like agriculture and the dollar getting ready to do a possible swing high. Might be interesting to see what happens to the market from this. Those are called catalyst. Pharmaceutical, which was once bearish, looks like it's recovered. I had this nice channel down right here. Now I have right here the 10 and 20 crossing back up. A break above this area at 59.5. And it looks like it's setting up for that, guys. Looks like it's setting up. There's a bullish triangle. A break above that can send this to 61.5. Look for some pharmaceutical candidates out there. But again, pharmaceuticals are not only volatile and gap a lot, but with earnings season, it's something you have to really be careful playing and know your strategies well. That's why I stick to options. Retail, I'm keeping my eye on retail. Why? It looks bullish, right? It looks bullish. Nice channel here. We did a bull pullback. I don't like it when it pulls back below the 20 like this, but it saved itself and got back up here. Why am I watching this and wondering, what's going on? Is during earnings season, how are the retailers going to fare, good or bad? What caught my attention was not only is the RSI positive, but the on-balance volume is not participating. You see this big volume right here on these big down days? It never recovered. We got a swing low up here. And for me, I don't like to go bullish unless I see volume strength. This down here needs to be above the moving average right there. I don't see that happening. It's going to have to convince me that retail is really bullish. So even though it's in a nice channel, I'm going to call that neutral to a very weak bullish. And finally, staples. Getting a pullback in the staples sector. And why wouldn't we? If the market's bullish, why would there be a flight to safety? But that's about all the room I'm going to give it right there. Another down day or two, and you're going to see that 10-day cross to 20. And that's going to be an interesting sign. Again, I want to bring your attention to this. The RSI is still bullish, but look at the volume already going bearish on the staples. So the naked eye can't add up the volume right here, but the moving average and the OBV is a great indicator. So this is strike one down here when it breaks the 20-day moving average. Strike two would be this one right here. One of these guys crossing its moving average. Strike three, trend change, is if the RSI breaks to 50. But there's so many sectors right now that are bullish that I'm not going to be even worried about the bear market right now. It'd have to take a couple big sell-offs for me to even think about that. There's plenty of plays right now in the bullish market. Again, as you scan for stocks, check for the next few days forward and the next couple weeks forward if earnings is coming. You don't want to be surprised on a gap or a head fake because earnings. Also, volatility is really low. If you're going to be playing the market during earnings season, take advantage of buying protection with calls and puts. Stay tuned for more from Tackle Trading. This is Coach G. Talk to you again next time.